Hello everyone, welcome back to the channel. I hope you guys are all having an amazing couple of weeks. Tonight, we're going to go over what we did live on YouTube about 2 weeks ago. We called some incredibly profitable trades. And then, as always, we have 6 or 7 new setups to go ahead and analyze with you publicly to give you a chance to just realize this industry is literally as easy as you make it on yourself. Before we get started, of course, I have to start with our disclaimer that says, hey, trading is high risk. Don't risk what you can't afford to lose. I practice high risk stuff. You obviously don't have to. You can follow similar, safer approaches. You can do smaller percentages of risk. And of course, different management. That's 100% up to you. And yes, I also had this typed up, and I want this kind of on the record before we even go over these incredible, these incredible amount of tips that we won. I'd like you to know that for those of you who are kind of new and just really getting started in this industry, yes, when we're about ready to go discuss these pips, please know the dollars that we're using is based off of one standard lot size. So for example, this week we got like 3,200 pips on a 20-minute call, which is, $32,000 on a standard lot size, approximately. That is based off of $10 per pip, and every broker that differs, but for the most part, that's pretty standard and based off of one standard lot size. Now, if you're using a smaller amount of money, you can, of course, have a smaller lot size. If you're using more money and you can have insanely higher risk than that. So, just to kind of touch base on that, obviously, choosing things with lot sizes that are based on risk percentage is going to be a lot smarter than choosing stuff based off of just a flat, consistent one standard lot size. So, just some discussion points for you, if you will. Now, let's take a second to go ahead and go over what we accomplished on that 20-minute call we did on YouTube, 2 weeks ago. So let's take a look. Look at what we looked at on, February 7th, right? So that was the first Tuesday of the month, if you will. We looked at only 4 trades. Now, before I even start talking about 3,200 incredible pips, I want to look at the week before that. This was an awful week. Technically, we profited with that 50 pips on gold, but still, nonetheless, this is a horrible week, right? This is never fun. But we're never looking at 1 week. We're looking at the big picture. We're looking at the long term, right? The marathon. This week, we had a 100% winning ratio. Great way to be. Obviously, those are the best weeks. We'll go take a look at those trades here in just a second. We earned over 3,200 pips. That is a lot of potential money. To give you guys an idea, again, this is blanketed, so there are variables, but at $10 a pip for a standard lot size, what does that equal? That's about $32,000 in about 20 minutes of time. It took us 20 minutes of time to make that video and more time to edit it and get it on YouTube, granted, but 20 minutes of trade analysis to make $32,000. And that's just the standard. That's not even including 10 standards or 50 standards. And of course, if you have a little bit less money and you're just kind of getting your feet wet, you can do stuff like a 0.01 lot size, which means you still earned $324, right? You earned, after fees and what have you, swaps, spreads, and the whole nine, maybe $300. Fine. You can do a 0.1, for example. Again, going off of US dollar-based pairs, you're still looking at over $3,200 in 20 minutes time. That's the kind of power that you have in your hand when you learn this skill set. So if you haven't already done so, please make sure you go to the link in the YouTube description. It's just a link tree. By all means, go sign up with a free demo account with any of those brokers. I don't care which ones you pick. My favorite is still Hugo's Way for my day-to-day trading, and then AFX for my high-risk stuff. Really been liking Henko quite a bit lately, and LQD if you're using really small lot sizes and trying to trade indices. Those are all great brokers. But it doesn't cost you anything to come to YouTube, check this out, and just kind of get comfortable, get acclimated to this industry. If you know nothing, you can start with these videos and babypips.com. It's completely free. Don't even buy their educational thing. Just go through the free stuff on that website. Go to my link tree, sign up with a couple of those different crypto wallets, and sign up with a couple of those different brokers, and just get acclimated. Try taking these trades along with me, all the definitions for how we're entering, how we're managing, when we're protecting and getting out, and everything you need to know is public, it's live, and it's available to you. So you'll get to see this do really well, great weeks, and of course you'll get to see the good, the bad, and the ugly, all public and available to you. So let's see. My mouse is being all floofy for some reason. Let's go to, this is the same system that we're using. We got over 5,000 pips the last, give or take, quarter of 2022. That's what we did live. And remember, this is a lot. This is no indices. This is all public and free to you on YouTube to just maybe practice. My hope is, yes, as I make more content on what I do in trading and how to actually trade and some topics that some people don't cover, that's all part of the general game plan. But in making these videos, my hope is to show you that trading is accessible to anyone if you're willing to take the time to get the skill set down. So this is all what we're doing kind of publicly. So far, privately, we're at 78,000 pips in my private coaching we do on Tuesday and Thursday mornings. I will have my own website here launching here in the next couple of weeks that not only will have some fintech available that auto trades for you, but also will have things like the morning classes where we get US 30, the big beast, if you will. Great weeks, good weeks, bad weeks, slow weeks, and everything in between. So this is what we've got so far in those morning classes twice a week, Tuesdays and Thursdays mornings, just to kind of keep everybody up to date on what's going on. But without further ado, let's go ahead and hop over to the chart and take a look at the trades we called. So last week, we have those 4 on the roster. This week, we've got 6 or 7 more. We'll go analyze those now. Okay, so starting with the trades we looked at last week, those are going to be those purple ones. And prior to making this video, I went ahead and highlighted a couple of the pairs that I'm looking at and very interested to see play out. So first thing I always do, which holds myself accountable and shows you guys what's honest to God possible in this market, is let's actually review what we talked about. We'll work our way backwards. I always kind of go back and forth. Remember, we analyzed this on 2/7 US time, which is kind of 2/8 for chart time, if you will. So let's take a look here. To minimize a little bit more, this is 2/8 all the way back here. We are waiting for this breakout. Since that time, we moved over, it's going to be a little bit in the way, but 98 pips, give or take. Not a bad way to be. So 98 pips, easy. Not a lot of drawdown. We popped into it once, we even popped into it a second time. So beautiful trade overall. That is a winning trade. I'm going to go ahead and hit WW to take it off of our watch list. If it will, W, take it off. And hit O, I'm going to go ahead and remove that sell line. So we were looking for a sell, we caught that sell, and we hit over almost 100 pips, give or take. So that one is done for the roster as of right now. US oil was next, and I actually got a whole bunch of private messages on this pair. I know a lot of people who made a killing on this instrument, I should say, not necessarily pair. We were looking right here, but we were mindful that a pullback was necessary, that we were going to get some kind of a reaction. So in and around this range, we were waiting for the breakout. And what do we get? We got the breakout. And if you see this little wick area right down here, we popped above, we wicked right down to where we said we were going, and then of course pushed up. Remember, all the rules that we're defining, all the management styles that we're using are predefined. They're written out. Can't change them. And even if I did change them, I'd have to tell you, and it's all written down, right? So what did we say? We say we're always protecting, whoopsie, blame it on my magic mouse. We said we're always protecting within about 50 pips. This moved about 270-ish pips. It's a little hard to see with that big circle in the way to give you an idea. But 260, 279 to somewhere in that range, right? 281 to give you an idea. Beautiful, wonderful, overall incredible trade. This was a very, very easy to capitalize on trade. I know people who got a ton out of this one instrument and just this instrument alone. But again, I'm going to take this off. We're going to remove all that. It's played out well. We're pulling back as we speak, so we'll see how to see if we want to look at this for another time, but not today. The next trade that we're going to review really quickly is GBP AUD. We were looking for the buy in this range. So let's go to 2.8, that whole 2 o'clock candle, that's right here. We wanted to see it break above this area. So we got the break above, and check this out. That's 351 pips on a Forex pair. That is incredible. That's perfect. We broke out, we retested, ta-da, great way to be. I'm going to go hit O, remove all those drawings, take that off of our watch list. We are done with this trade. If you're still holding some of these positions, they actually have a lot of room, actually. If I pop up some time frames, there is more room on this trade. I just can't look for a new entry today. So if you're still in this and you're trying to capitalize on the rest of this move, my recommendation, obviously, you can do what you choose to do, but would be to trim some of your position. So close some of that off, take some of the money off the table, and let the rest run. You can let it run with the fancy management tool. You can let it run with trailing stop. You've got a plethora of options, but pick something that protects the investment you have made And of course allows room to make the rest of where this is headed. So there's still plenty of room on this pair. Last but not least, Australian 200. Now this is a smaller, but still an index. So this one moved, what is this? And it's still moving. So 2,600 pips. 2,600 pips from where we looked at it. Granted, we're managing off of the 1 hour. So this is where we were at. Let's find out exactly. 2.7, 2.8, so right around here. We popped into profit by a couple of hundred pips, pulled back, and took off. Great overall trade. This trade was worth a fortune if you were actually trading this. So I hope that some of you guys capitalized on that. Again, I got most messages on oil trade, but also on this trade. Like, holy cow, that's insane. Oh my goodness, could not believe it. I hope that you guys are following along. Because even if you're not a trader, even if you don't know any of this stuff, you can still go to babypips.com. You can still download the MT4 platforms from a couple of those brokers. It literally costs you nothing. And just do that. As you get more comfortable, as you learn the skill set, of course, I would recommend maybe considering purchasing something like the Simplicity system. I work with that company, and they're an awesome company. Of course, we have some other management tools as well. All things that can help you. But for now, I would say don't spend a single dime. Come learn a little bit. And then, of course, if you find that this is a good system for you, you can use that. But let's take that off of our list next, if it will let me. Okay, so we're moving all the drawings from here. We're taking that off the board. Now, see how quick that was? It did not take a whole bunch of time. This, however, might take a couple of minutes. So we've got 1, 2, 3, 4, 5, 6, 7 trades. Before I even bother to go into all this, I want to at least address, we've got 1, 2, 3 CAD trades. That is a lot for the Canadian. We don't want to ever over leverage per pair or per currency, so maybe consider not taking all of those. If I do analyze all of them, please don't take all of them. That's too much. Secondly, 7 trades and an index is a lot. So it's a lot of exposure in the market. If you're going to consider trading this index and this metal, maybe consider only taking one of these Forex pairs. If you're not going to be taking this index and this metal, then by all means have some fun with the Forex pairs. But we do need to at least acknowledge we can't possibly manage to take all of these at the same time, even if you're doing 1% trade, 1% risk on your account, which most people aren't, if we're being honest. That's a lot of exposure, just in terms of your leverage and your margin alone. I don't care what broker you're on. I mean, even if you have a very sizable multiple six-figure account, it's a lot of exposure at one time. And it is going to, I don't know exactly to what extent, but your margin availability will be impacted if you try to be in all 7 of these particularly. So there's your disclaimer, your warning, if you will. Always on the 1 hour. All the management is already defined. Let's start here. Euro US dollar. As you can see, we've got a buy simplicity signal right here. We have popped down to retest this area where we broke out, and right now we're edging up. We have to acknowledge that the world at large is kind of doing its thing. It's a mess. They can't figure out what's going on with really anything from the euro to the US dollar. But technical analysis wise, we have a lot to look at. We've got a potential head and shoulders. We've got some higher time frame confluence. And of course, we've got this nice little signal system. It's not meant to be 100%. It's just with good management, you can still have great results, right? So with that in mind, going off of where we're currently at, I'm going to zoom in. The most recent fractal is all the way up here. We're not going to wait that far. That's quite a bit of an ask, right? So right now we've broken down. We've made a lower low. I'm going to pop down some time frames. Just on the line chart, I'm going to take out all the noise. Okay? I'm going to put this right here. So if we break, when we break, if we break right above this mark, I'm going to go ahead and make this green for buy. Make it dotted for pending. So pending buy, back to candles. Get a chance to see. Above this level of structure, I'm saying yes, I'm in this trade. So what time is it currently? What candle are we on as of right now? We are on the 2:15, right? The 2 o'clock candle for the hourly chart. What if we break above 1.06595, right? That's where my buy pending is going to be. How I'm going to manage it is all pretty simple. We've been doing the same thing for quite a while. Here's that buy pending order. My stop loss is going to be below structure, right? Plus a 1 hour ATR cushion. So in this case, that's 12 pips, not a whole bunch. I'm always 100% of the time protecting within 50 pips or 1 ATR, 1 ADR, right? So in this case, that's 50 to 60 pips, right? Anywhere in that window, rain, pour, or shine, I am trimming out of my position. I'm moving my stop loss into profit. I've got automatic management that does a lot of these things for me. And I've got a trailing stop / exit manager that's all kind of managing my trade when I'm not in front of my computer. So no matter what, you hit that mark, you're good. And as for the rest of the pips on the table, let it run. If I zoom out, I'm not going to do that on all these pairs. That would take forever. But to give you guys an idea, if my stop loss is here, this is a 1 hour time frame. Moving this down. My risk to reward ratio is still 5 to 1. Putting my stop loss here, that's well beyond the 10 pips that we need, the 12 pips that we need. Even if you're using your stop loss here, which is the low plus some room, and this is your only target, you're still at a 2.78 to 1 risk to reward ratio. Great way to be. Ooh, actually that reminds me, I totally forgot to talk about that. I'll talk about it next time I do this video. Our risk to reward, our gain to loss on these even the simplicity videos are incredible. It really is kind of awesome and impressive to see. But figure your actual target is going to be up in this range, which gives you, again, that 5 to 1 risk to reward ratio, give or take, right? You're always protecting anyways. So we're going to come up into this range. We're going to be protected no matter what. We're going to wait till we break out of here. And as we break out of this next level, we know what our next target is. All really, really simple. Trade number 1. There you go. Ooh, a little apprehensive to do this many trades, though. A little apprehensive, because that also means I have to review this many trades. It's a whole thing. But gold, first off, perfect head and shoulders. Second of all, we're just looking for a retracement. We're not saying that this is going to be the forever buy as of right now. I do think we have a little bit more on the sell side to go for the bigger picture. This is a counter trend retracement trade. That's all we're doing. We're looking to get a couple of pips out of where we're currently sitting. So figure even coming into this range. Let's see. Let me try again. 3 to, wow, what is that? There we go. 6 to 1 risk to reward ratio with our stop loss there. But I don't want it there. I want it a little bit lower. 3 to 1 sounds a lot more accurate. 3 to 1. This is a swing trade. Trying to get a 3 to 1 consistently, not a bad way to be, right? So if we break out, this is our minimum target. This is really where we're looking to go and to get some kind of response. Now, granted, I wouldn't be surprised to see us spring up into this level. But either way, even if all we're managing to get is this retracement, which is going to break this most recent level, you're still better than 1.5 to 1. So I'm going to hit X for exit that. Zoom in. And now let's see. Same concept. This fractal is really, really far away. So I do not want to wait that long. I don't want to give up that many pips from where we're at. That's a lot of pips. So from where we're sitting to that 1 hour fractal, Lord, that circle is driving me nuts. So 75-ish pips away. That's too big of an ask, at least for me. So back to my line chart. I love it. I like it. I love it a whole bunch. Here's where we're sitting. What I'm going to do is be looking for my buy as we break out of this area. So back to the candles. Try that one more time. Back to the candles. Here we go. We've got 1837. As we break above this fractal point, I'm looking for this to buy up. Not a bad way to be. We're protecting within 50 pips. We've got a great overall risk to reward. Here's the 15-minute time frame. Back to the 1 hour. Let's go from where that entry is sitting. We're putting a pending entry there, a pending buy. 177 pips, easy target. Easy target. Not too shabby. UK 100, I'm already in this. I do have to disclose that I'm already in this quite a bit. So this is an hourly entry. Trying to manage this on an hour from where we're currently sitting is an expensive decision. Please know that. Not to say it's a bad decision, but it is an expensive decision. So I'm going to zoom all the way out. We have failed to break this level multiple times. I'm going to go up a time frame just so we can see. I don't know why I'm spending so much time. This is supposed to be much quicker. Sorry. But this may help some of you guys. So from where we're sitting at right now, if we continue to break below, come on, let's move out of the way. We've got 500-ish pips right there. A little hard to see because that circle's in the way. Not a bad way to be. All the way into this range, we've got 700-ish pips. I'm looking to go into that 700 pip window all the way down to break this recent low and come retest this area. So that's 1,300 pips. 1,300 pips. Incredible trade. Our most recent fractal is 700 pips away. That gives us about a 2-to-1 if we enter right now. So entering right now, not the best risk reward. Are we going to get a pullback? That's a little bit, we've already got a little bit of a bounce. So overall, got another 700 pips on top of that. This is a good trade, but just know it's an expensive trade. Trying to manage this on the 1 hour with this much of a move already. So with that said, I think I'm going to have to actually skip it. I'm not doing this one. I'm going to take it off the watch list. Just like that. For those of you guys who have the money and know how to manage these kind of indices, by all means, you do you. Risk to reward is not a bad way to be, but for public, I'm going to take that off actually. Being a little bit smarter, or maybe, we'll see. I just want to show you guys what that risk to reward looks like. Into this range, you're at a 1.6 to 1. Not bad, considering you've got much more room. But entering right here, not the best way to be. That's where you're going to get the most impulses. 1.6 to 1. So I'd like to see a little bit higher, personally. So for now, I'm going to take that off. If you happen to get a pullback, by all means, I'd be definitely looking for that potentially sell. So no more analyzing that. Sorry, got your hopes up and changed my mind. AUDCAD, let's take a look. Here's where we're sitting. Perfect buy signal. We've got the continuation. We've got the retest, breakout. We continued again on the bigger picture, retested and failed to make a lower low. We are in a prime position. We're breaking above previous structure. That's an area of significance, if you will. And now all I'm going to do is grab my green line. You have a couple of options. Here's our most recent fractal. If I zoom out, it's not too bad. This is a pretty slow moving pair in general. It is going to cost you a couple pips waiting that long. Total of, what is that, 20-ish pips. If you want to wait till that fractal, of course you have the option of going down a time frame. Totally fine to do so. If we buy, well, I'm going to go this one more time. If I buy and I'm only looking to come up into this range and my stop loss is below previous structure, buying now, we've got a 2.6 to 1, and buying here, wait for it, got a 2 to 1. Not a horrible way to be. Coming up into this range is a very easy target, very high likelihood to hit target. You also, of course, have this range. It's going to give you closer to a 3 to 1, and definitely expect a reaction in this range. Wait for that to catch up. It's a little laggy when you're recording and zooming and all that good stuff. I might not want to. Hold on. It's definitely not a 2.9. Maybe, baby. Hold on. Nope, not doing it. But I digress. Back to smaller time frame, just so you guys can see where that's at. Not bad. You can wait all the way to this fractal. You're at a good area now as we speak. As the market is opening, we're pushing down pretty steamy. Let's see. We're pushing down pretty hard and fast. Nice little wick to the downside. Oh, we got some live action here. News. Wait for it. Just wait for it. I suppose I'm going to put it above this high. So instead of keeping it there, I'm going to go ahead and put it above this high and give us a little bit of a better entry. Let this finish playing out. As we break above this, this is still the 2 o'clock candle. We have yet to move above that. Put your pending order right here. What is that at 0.2? Well, 0.92892. Put your pending order there, and that's what I'd be looking to do. So buying AUDCAD at that breakout. AUDCHF looks really comparable. We're pushing down again. I'm going to zoom out so you guys can get a good picture. We did have a buy signal. I'm pretty sure this news candle we just saw must have knocked us right out of the park. So again, that's one more pair we're going to go ahead and skip. That was what I had taken off. So WW. Oh, there we go. I wanted to limit the pairs, and the market eliminated themselves. I can live with that. Here's where we're at CADJPY. This evidence dot was previously a simplicity sell signal. We've popped up. We have failed to make a higher high. We've retested. We officially have a double top. And in general, I like this for the sell. So what I'm looking to do is, let's see. Try this one more time. Is sell at this fractal break. Dun dun dun. Gotcha. So we're going to go ahead and zoom in so we can see this. Here's that fractal. Zoom in one more time. Let's go ahead and make this a little bit more accurate now. The most recent fractals right here. We're selling at the break of this. Of course, you have the option to pop down a smaller time frame and take a sooner entry. It's going to save you a couple of pips. Of course, limit your risk by a little bit. But in general, duplication to me is worth a lot more than saving a few pips. duplication and consistency is worth a heck of a lot more across the board, at least for me. So with that in mind, there you go. Past that 2 o'clock candle on today's date, we have one more pair. That's the 2 o'clock candles right in this range. We know what we're looking for. That's 2222. Gotcha. And last but not least, so that's CADJPY and now NZDCAD. The market luckily eliminated a whole bunch of the pairs that we were going to look at, so it's actually kind of perfect. It limits your own risk and your own need to overanalyze and overmake decisions. So again, great problem to have. I'm going to simplify this and go straight to the line chart. We've got a simplicity trade. We did make a higher high from where this came in. Actually we did not. That's a fib. Did not. Let's find out together with our crosshairs. That came in on this wick candle. So we have yet to make a higher high to really validate this signal. Okay, cool. So what are we looking for? In order to validate the signal, we need to actually get the continuation, which since we don't have that just yet, this is what we'd be looking for. Since this would be a buy, we're going to make it green. Well, not red. Green. That's not green. Green. Ta-da. As we break above this area, we're looking for the continuation. So what does that look like? Risk to reward rise. Back to our candles. Let's hit buy. If our stop loss is below structure plus some room, and our target is up here at this area of interest, as I call it, our risk to reward is still better than 1.25 to 1. I think it's actually a little better than that. I'm pretty darn sure. Let's try that again. 2.87 to 1. There you go. That's not a bad way to be. This is about what you'd be looking for. Remember, you're protecting within about 50 pips or so. So real quick, just to analyze, we've got EURUSD. We're looking for the buy upon the breakout. Gold, we're looking for the buy upon that breakout. AUDCAD, we're looking for the buy upon the continuation of the breakout. CADJPY, we're looking for the sell upon the breakout. And NZDCAD, we're looking for the buy. So that gives us 1, 2, 3, 4, 5 pairs. 5 perfect pairs to maybe consider going over. This call was a little bit more than the 20 minutes that I wanted. But as always, if you have any comments, questions, please do let me know. Otherwise, please make sure you click like and subscribe and all the stuff that helps YouTube. But most importantly, I just hope that you guys are following along with these trades in your live or your demo accounts to realize this is literally as easy as you make it. You don't have to have it all figured out. You don't have to have it all together. You just need a consistent system for entry, a consistent system for your lot sizes, and a consistent system for your management. And then you just need to do it. Like, that's it. You need the skill set that goes along with it. So if you have any comments, questions, all that good jazz, please make sure you put them in the chat. And otherwise, I will see you again in 2 weeks, the first week of March. And I hope you guys have a great week.